All right. Today I'm gonna look at the previous FOMCs because one I missed this week. I actually just fell asleep. I was too tired to trade it. And I woke up. It was 2:30, but I didn't have no setups and I was scared because it's highly volatile. So today I'm just gonna go through my charts and see, you know, how could I have captured it and see if there's like a common ground, which so far I found there was. And if you haven't, you gotta listen to Raja's YouTube video. Uncle Ted was on there, and he was just telling us just look at the previous FOMCs, see what happened, and that's what I'm gonna do right now and show you guys what I see. So, if you don't know, over here on the left, I got all the FOMC dates, all here from 2022, January, blah blah blah, all there. If you don't know how to find out, all I did was go to Forex Factory. We choose FOMC at 2:30, the press conference, and it's all there. All of the dates are right there. So you can just go back to TradingView, go back on your MetaTrader, and you just find, look at these dates and review it. Plain and simple. So unfortunately, TradingView doesn't have that much because I'm not subscribed. So I can't go all the way back to January, but I have it here on Blueberry Markets. So this, I should highlight it. Let me fill it, make it thicker. All right, here. Just so we know the area of focus, right here. This was January 26th, which was one of the dates. Now here, you can see in the timeline it's 2 o'clock, 2100, and the markets didn't react, but we got this nice wick rejection. So now I'm thinking, and this is a 15-minute time frame. I take trades off the 15-minute, maybe even 30, mostly 15. Yeah, we got a nice wick rejection. I don't know the trend. I'm not gonna zoom out because I fear, yeah, it's gonna zip forward. So I ain't gonna look. Oh shit. Okay, I ain't gonna zoom out or zoom in too far. Anyways, we see this wick rejection telling me that price is gonna probably drop. Um, Decent traffic to the left over here, you know. But there's momentum, there's volume, there's Powell's talking. Some crazy stuff's gonna happen. High volatility is gonna happen, right? It went down, it dropped. Then we got a bullish candle right over here, and you know what? Now it just dropped. So honestly, just looking at this, I'm thinking, you know what? Oh, let me change this to white. You know what? Why not take sells below this and stop loss above the previous 15-minute candle, which should make sense, right? And if you measure this, it is 220 point risk. Ultimately, the market dropped 580 points, more than enough. I just want one-to-one. We got this wick rejection. To me, it makes sense. So now I'm going to document this. And this trade happened at 2:30. 2:30 is always a press conference. So we're going to only look at entries at 2:30. All right. So here's a 2:30 candle. It broke below these two possible support over here that you could see. But we got volume. We got volume, and I just think when you got volume, it's just going to drop, right? You're not going to get a little pullback. So the whole market's either going to sell off or keep buy. So here, what I'm going to document is 26. Nice setup at 2:30 and 26. Let's see. Yes, setup. Now the only thing I'm not taking into account for is slippage, because there's no way for me to see where I would have got it filled. But I see there is a setup. We got this nice wick rejection, nice sell off. So to me, hindsight is 2020. I know, but maybe this is the type of setup to take. The stop loss was about 225. MFE max favorable exposure was about 585. I'll say 580. Right? So at least a 2-to-1 trade right there. So that deserves a check mark. And that's it. Next one, March 16th. All right, let's go to March 16th. Up. Here we go. 2100, right? That's what we want to look for. Here we go. Let me just highlight this. All right. Over here, this is the 2 o'clock candle. Market dropped, right? Market dropped. And then 215, some indecision candle. We still got some sellers. And then here, what it looks like what happened is the market went down and then it went up, right? So maybe you could take a buy over here as it flipped bullish again, but that's not enough confirmation, especially with all of this. Actually, you could, you could wick fill this. How much is that risk? 132 to make 120. Yeah, that's fine. But I know, just knowing myself, that I wouldn't play a little flip because it's so volatile. I'd rather have it break the previous candle highs or low, which is more of a confirmation for me. So you wait for 230. We got a liquidity grab. And you enter on the break of this high, right? So right around here, that would be our entry. Stop loss is the previous candle, is a current candle low because it's a liquidity grab. So here, risk is 275, let's say. And honestly, this is all clean traffic. 300 points, 320 points, so more than enough from what I risk. And here you see a max of 525. So March 16. Yes, setup stop loss is 270 for MFE of 520. 270 MFE of 520. Next one is May 4th. Right? Like, this just makes me more confident. It's so volatile. There's a setup here. There is a setup. Okay. May 4th. Let's go to May 4th. Okay. Ooh, nice. See, even without identifying the 2 o'clock time frame, we already know. We already know where it is because of the volume. The volume is crazy. This whole thing. Now, is this clean traffic? Let's see. Let's go to May 4. It moved a lot. 30-minute. Okay. Yes, it is. Look at that. So this is May 4. It was pretty much clean traffic, especially once you get up here. Ooh, look at that. It just filled all that. Nice. So, anyways, getting back to this. This is, oh, here you can see right at 2 o'clock I took a trade. Right? You can see that dot, that arrow. Obviously it lost, I think, and just made a few points. See, profit 13 bucks. Bad trade. Shouldn't have taken that. What I should have done, wait for 230. Right around here. Another liquidity grab. Right? Let's go back to trading view. Consolidation. This whole thing is consolidation. And then we just see a nice liquidity grab over here at 230. Look at that timestamp on the bottom, 230. So buys above the previous candle high, stop loss all the way down. And I don't care how wide stop loss is because this thing is so volatile. It could whip and go up and down like crazy. I'd rather risk like 1,000 points and my lot size automatically change with magic keys. So if I risk like 1,000 point, let's say 500 points, that's like trading. I'd be risk trading like a 0.1 lot or something, basically like $1 a point. So, anyways, this one 380 point risk, and it went 709. Okay. But was there a setup at 230? Yes, setup. Stop loss 390. I think it was 390, right? Yeah, 390 for a max of 700. That's it. Like, holy shoot, man. I just like 380, man. 380 is somewhere here. Yeah, like after I get off field on this candle, man, the next trade in 15 minutes, I'm done. I got my 1-to-1 that runners run, and what happened? Oh, I went back down. It's all good. All right, next FOMC, June 15th. Let's go to there. Whoops. Mute that. June 15, here we go. All right, maybe this one could be a loss. Let's see. 230? Yeah, 230. See that? All right, let's highlight this. So this FOMC is a little bit messy, but you can see that I took a trade, I lost because I sold it. I bought up here. I think I might have broke even or something. Yeah, there I lost 89 bucks. Made $1 there. Yeah, this was a loss. I should have been reviewing this stuff. So anyway, 2 o'clock I took a trade. Why did I take a trade over here? I think it was a low. Yeah. I took a trade here because it broke this low and there was clean traffic to the left to drop. Anyways, it dropped. I got scared. I don't know why I did that. My stop loss. Stop loss. I don't know my stop loss here. Anyways, it must have been like that, but we're improving on this trade. Wait for 230. Wait for 230. You see a liquidity grab, same setup as the ones I've already mentioned. Buys above here. Stop loss at the current candle low, which is 386. Okay, 386 for a max. Ooh, that would scare me. Okay, 350. So I'll say yes, there was a setup. Stop loss was 386. MFE. I'm gonna say the max favorable was 355. And honestly, if I'm risking 386, I might just take 350 or 300. Like, ain't no way I'm letting it come back to entry and then letting it, that even though it jumped 476. Here I would have for sure gotten stopped. I'm expecting some slippage too as I got filled. So this June, maybe not the greatest profit, but it's all good. All right, next one is July 27. Go. Ooh, beautiful. Let's see the traffic to the left on TradingView. July 27. Oh, this is it? Yeah, that's it. Okay, consolidation. Okay. A little messy there, but I think just consolidation for like how long? For 7 days? Breakouts possible like this. This one looks so easy. July 27. This MFE is going to be huge, right? So this must be 2 o'clock. Yep, there it is. 2 o'clock candle right there. Here's that indecision candle again. And that's actually what I've noticed. If we go back to, what was it? June 15th. Also, if you rewind, there's always a move, indecision candle, big move. I delete the other rectangles, but that is a trend or the pattern. So I'm just gonna replicate it. Now I'm gonna feel so much comfortable, and I probably make like so much more money now. I'll pull up the calculator and see my potential profits. All right, so here, bias above here. That's a buy. Stop loss, current candle low as it made that liquidity grab. And we're risking 115. July 27. Setup, stop loss. What was it, 115? Yeah, 115. And max favorable. Holy shoot. 440. 440. 4 times your money. Honestly, I might have just taken this. I mean, holy man, that's crazy. And then we got September 21. And I know there was a setup because I missed it. I just watched it happen. So just for calculations. Here, this is 115 points. I was $500 a trade, but I'd be trading 4.3 lots. Yeah, 4.3. So usually I close FOMCs. I've already decided I'm gonna close 90% once I hit 1-to-1 because it's so volatile. 4.3 times 0.9, so 3.8. I risk 1.5, 115, so 3.8 times that by 115 points for that 1-to-1, 437 bucks. This one went all the way up as 440, so 437. Got a 4.3 minus 3.8. So remaining lots, I got a half lot on. 50 cents per point. Times that by, let's say I hit. Actually, you know what? Typically, I think I might have just taken this 350. Yeah, maybe 350 as it broke this low. So 0.5 times 350 is 175 plus 437. I make 612 bucks. Amazing. Amazing trade. Man, 0.5 times 4. And if I knew the peak, I would have made 657. It's actually not that much. 612 versus 657. Only missed out on 45 bucks. So yeah, I think I just do a face up structure. That's great. All right, now September 21. Where is it? Is it? 22. This is it. All right. Number 21. So here is this big drop at 2 o'clock. Again, 2:30. You can see a time stamp on the bottom. Nice setup. Same setup, man. A big drop, indecision candle, and then it chooses a direction. I guess it usually just reverses. That's did it reverse? Some FOMCs it went bullish, small indecisions and all that. So, anyways, if we do the same setup, 2 o'clock candles with this one, because it didn't really make a liquidity grab, I think I would just put it down here. A wider stop to the lowest point, but you do see a little bit of a, you know, higher lows being created all the time. So if you want, you could put it down here at low of this big black candle or the low of the current candle. I don't even think it matters. let's see, you're risking like 180 versus 200. Yeah, I would widen it because you're only missing out on a few more points. I'm not gonna, and then imagine you get stopped and it goes your way. I'll be so mad. So 215. Stop loss 215. And MFE was 430. So exactly a 2 to 1. Um, Historically, if you just quickly look back, all of the trades after 230, it pulls back, slows down significantly. It's not worth it to trade. Where's that other rectangle? July 27th. Right? So here, after 230, some momentum then drops and dies down. After that, it's June 15th. Sorry, there's no auto. Yeah, June 15th. Drop. Here you got stopped out. Next one is May 4th. I'm ready. I'm excited for the next FOMC. Yeah, here. See, just continued going up and then died, I guess, 1600. So that's how I'm going to trade now. I'm just going to wait for 230. I don't even care what 2 o'clock does. Next FOMC is, I think it's December. Oh, is there in November? Let's see. Let's see this. So we got September. Oh, is this it? Oh no, that's not it. Yep, it's this December. December. Oh yeah, there you go. December 14th is the next FOMC. So it's 4 months away, 3 months away. Okay, I'm gonna be ready for 2023. That's gonna be nice. And I can do the same thing for CPI. CPI moves like crazy, man. CPI moves like crazy. Like it drops a lot. I just gotta review, see what happens with that. So that's how I'm gonna trade the markets now with FOMC. Just wait for 230. The setups are nice. I see the liquidity grab. I see the price action, breaks of the current highs and lows. I mean the previous highs and lows. And even though I'm gonna be risking like over 200 points, it clearly shows me that I can at least get a 1 to 1, close off 90%. So that's how I'm gonna do it. And next up FOMC, I'm gonna just try to capture some points. Watch Raja's video.